Hi everyone, welcome back to the Attract Capital webinar series. I'm here with David Barnett, founder and CEO of Attract Capital.
Hi everybody.
So I'm your host Sarah. I'm going to talk to you guys today. We advise exclusively on middle market scale up transactions here. So today we're going to talk about mezzanine debt and how mezzanine debt buttresses your business growth. So Dave, let's get into it. For people who are new and don't know, what is mezzanine debt? Can you give us like a quick definition?
Sure. Mezzanine debt is equity flavored patient capital. It comes in the form of a loan, but it has the function of equity, and it gives a company more time and more capital to be able to transform itself, whatever its ultimate growth goal happens to be.
So how should people think about the benefits of how this debt is supporting their corporate growth? How should they think about it?
So much like in a structure, in a cathedral, you have a buttress that supports the upper side of a cathedral. Mezzanine debt enables big business transformations. So sometimes a company wants to take a really big growth step and they need a lot of upfront investment in order to do so, and they can't do it on their own, or they can't raise that money from a bank. So that's what a mezzanine debt lender does. And the reason you can get a much bigger loan from a mezzanine debt lender is because they base the loan on the cash flow growth of the company, not on the assets of the company.
Oh.
So it's a much more meaningful amount of
like
capital.
the amount of potential that they could have.
So you're at this level and you're going to that level, and the mezzanine lender is smart enough to be able to understand why you're going to get from point A to point B and make a loan based on that.
Oh, okay.
So you get more funding proceeds than you would from a bank loan, and this is especially valuable, Sarah, for acquisitions, for pushing into new markets, and for diversifying on a large scale if you're vertically integrating up the food chain. So it's a very, very valuable thing to embark upon a growth transformation for a company.
So like theoretically, if like a smaller airline wanted to buy another airline, like, or maybe a bigger airline wanted to buy a smaller one, like I know they're talking about JetBlue and Spirit Airlines and all that, that would be a use case.
Exactly, a great example of a use case, Sarah. In fact, for a company that size, they would typically use a lot of debt called high yield debt or a leveraged loan from a bank, because for big companies can get loans based on cash flow and cash flow growth. But mezzanine debt is specifically geared for middle market companies that are smaller, but it fulfills the same purpose, because JetBlue is going to buy Spirit, they're going to create a much bigger company, but it's a very big step for them, so they need an aggressive form of debt funding.
Okay, well, yeah, thanks for clearing that up. I think it's good to think of it that way. A lot of people have been talking about it. So
absolutely.
We talked a little bit about what mezzanine debt is good for, but how else does it provide that buttress you were talking about for corporate growth?
So it really kickstarts hyper growth. Much like venture capital can help a startup company move into a new market and sort of really make a big inroad into a significant market wave. That's what mezzanine debt does. So, and it also, at the same time, it is relaxed and it's long-term in nature. So mezzanine debt lenders are very patient about getting their loan back, where banks want you to pay it back right away. Mezzanine debt lenders say, keep the money for 5 years, just pay us interest, and you can pay us the entirety of the principal at the maturity date, which is typically 5 or 6 years. The loan payments being deferred is a huge benefit to the company, because you don't have to pay the principal back. You keep it in the company and you get to reinvest it. So what it does is it not only funds the big growth step, but you have extra cash flow that's coming into the bank, and you're able to accelerate your growth by feeding the investment more over time. And then the other thing that's very important is that a lot of businesses that are closely held, owned by individuals, they are a bit more conservative because they've always had to personally guarantee a loan if they take a bank loan. So with a mezzanine debt facility, you don't have to personally guarantee it. So you can think bigger and you can invest more aggressively. So you're not sort of being cautious because you don't want to take the personal risk.
Seems like there's a little bit more of a safety net, both for more time and less of a everything falls on you. That sounds
exactly.
So understandingly, it makes sense why more people would want to work with mezzanine lenders.
Perfectly said.
Would you say that they're more cooperative than bank lenders?
I would say
just different.
They're different. No, it's a good distinction, Sarah. They're different, but they're also more cooperative, in part because they have to be. Because whereas banks are lending against assets, and a bank, if they don't like what's going on, can always accelerate the loan and foreclose on the company and the assets of the company, mezzanine debt lenders have made a loan against the cash flow value of the business. If they accelerate the loan, they're probably not going to recover much in collecting the loan. So they have to be patient. But they also, interestingly, they usually own a small stake in the business. So they have an incentive and alignment with the owner of the company to grow the value of the company. So on the one hand, they are more risk averse. They're less risk averse than a bank because they only have one way out through the cash flow.
Sure.
On the other hand, they're more long-term oriented because they're going to get additional valuation upside.
Yeah, that makes a lot of sense. So I think you explained it pretty well. So thanks for laying out how mezzanine debt enables corporate growth. And thanks for tuning in, everyone. We look forward to speaking with you soon.
Thank you.